Although this one's a little different this year, I think. Playing us a little bit.
Green instead of blue.
Yeah.
That was our biggest change.
It struck me, but what's going on?
Next level. All right, we are live and recording.
All right, I'm Mike Fancher. I'm chair of the CAC Audit Corporation's Audit Committee, and I'd like to bring this meeting to order today on the 20th of October. First item on the agenda is to review the minutes of the last meeting, which was held on March 20th, 2025. Open to any discussions or comments?
I'll move.
All right, second, please. Yeah, sorry. Yeah. All right. With that, we've accepted the minutes for the March 20th meeting.
Have a vote.
Oh, vote, sorry. Yes. Aye.
Thank
you. And with that, we're reading today by UHY, that's going to present on the audit review coming up. Brian Kearns or Jessica Blaha. Review.
Thanks, Michael. Yeah, so thanks for having us back. And, we like to meet at least twice a year, formally for the audit committee meeting. The March that you just approved the minutes on are, obviously to review the results of the audit. And, in the fall, we like to get together just to talk about the audit plan, any risks, uncertainties, but also it's primarily to review the scope of the audit, but also I think, mainly to get the audit committees, and management's, input on the audit process. If you have any concerns, risks, whether at this meeting or feel free to reach out to us. We want to incorporate that as we get to our full audit plan between now and the end of the year so that we can incorporate that, because there's obviously a quick turnaround time in terms of the public authorities of December year end to your March reporting. So we want to make sure to execute that, effectively, efficiently. But with that said, there's a brief presentation, so there's not, again, too many new changes. There's, one or two small things, that may impact you, and we could talk about that, but also open discussion. If you have any concerns or comments, feel free to speak up. In terms of the team, it's very consistent, as you saw. I'm partner, at UHY, and Jessica is senior manager with us, and so we do incorporate, new staff members that, just for a fresh perspective, to keep them involved, to make sure, that we, always looking at new things. And that's part of the audit process. But, generally speaking, the core team is the same. With the audit, on page 6 here, the objectives and strategy, just a reminder, that UHY is independent of the corporation, and we're opining on your financial statements. And those financial statements, of course, are the responsibility of management. But we have a, year-long, continuous communication to make sure that we understand the organization, the accounting principles that are being taken. And, when we develop our risk-based audit approach, that's based on, updated understanding, concentrate on any new transactions, new accounting principles, new, process standards, etc. But with that said, Jessica, did you want to jump in here with the rest of the audit objectives and strategy?
Sure. Yeah, so just overall, Brian hit on the key points, but our role as the independent auditor is to provide assurance that the financial statements are free material misstatements. And through that, we do a risk-based audit. So as Brian said, so we're focusing on the specific areas, the targeted areas, not everything necessarily. So we will develop that audit approach based on what you have significantly happening. And we'll probably discuss a little bit today if there's any areas that you're interested in us looking more specifically at, the different transactions that are there. So based on that risk assessment, determine the nature and the timing of the audit procedures. So the areas of audit focused on 8 is where we typically currently put our focus. And this is gonna always be adjusted, but this is based on the audit plan. So obviously those significant projects, Liberty Park, Clinton Market Collective, and any other grants or programs you have going on get more significant attention for recognition, valuation, and disclosures, primarily around revenue, cash investments, if there's any property held for investment at least, which you do deal with. And grant revenue is always an area to look at if you're dealing with any significant grant revenue, although I believe this year we're not looking at federal single audit, so it's a little less.
Yeah, so no, last year, No, the year before, it's been a couple of years, but if you have over $1 million, it requires a federal single audit as well. Not expected, you're not having that this year, but with that said, obviously materiality comes into play, that's both, quantitative and qualitative. And just, as we talk about, obviously, the significant transactions in the year, we're actually wrapping up, agreed upon procedure on the Clinton Market, Collective, just to finalize and release those revenue funds from ESD. But obviously, biggest event of the current year has been Liberty Park, accumulation and the transactions there and then the possible, next steps. So in terms of 2025 though, what's actually happened from an accounting standpoint, it seems, talking with management, it's more likely than not that be more of a 26 transaction, but they're, probably look at management to enhance those disclosures and make sure that story is being told, and accounted for properly as well. But these are primarily capitalized costs that have been accumulated because you're buying or acquiring, land, property, buildings, etc., for development. I think it's still undetermined, in terms of what actually is going to be the project, and who's going to, at the end of the day, own the transactions. But if you're acquiring the property and there's value there, that's how you've accounted for it so far. It's almost like a construction in progress, if you will. So if you're transferring that or selling it potentially at a sizable loss, in 2026, or, but if you're gonna own it, operate it, there's counting for that. But if you're going to transfer it in 26 or sell, at a loss, that there's some related disclosures. If something is known, and more likely than not, you might want to look into enhancing those disclosures as in 2025. If you, between now and the end of the year, you do enter any agreements or transactions, or, what the actual plan of that property is. Because, at some point, there's going to be a sizable impact on your financial statements, obviously.
Even if it's not a 25 issue, potentially there could be a disclosure.
It could be a
immediately
disclosure
thereafter.
Yeah, I don't think you'll trip, the recording of actually changing the value unless the actual transaction has been entered into in 25. But if you, subsequent to year end, something happens, or you plan to, if the plan of management and the board has sort of been, certain, or, more likely than not, the plan, you could enhance that. I mean, we do have a pretty healthy, substantial footnote about the properties, but to date, it's really been about the acquiring and capitalization and that whole process and funding of it. Now we start to see the other side of it. So as it becomes clearer, you just want to make sure you enhance those disclosures accordingly.
Gonna be limited mostly to notes.
Yeah.
Okay.
So then, yeah, slide 9 is just our required communications with those charter covenants, those in the room right here. So we go over these every year. So this is just a high level summary of what we are required to communicate. One is being at this meeting and going through this presentation of our audit plan, and then coming back at the end with the audit results. So this is, like I said, just a summary. We've kind of already gone over our responsibilities. And we always like to remember and communicate management's responsibilities for financial statements, and we are the ones auditing those financial statements. The plan, scope, and timing of the audit is the same as typical years, so that is to start in early 26 and finish by March 31st, I believe. Then any significant findings that result from the audit, we will also bring to your attention if they do come up before the results meeting. Any illegal acts, if they ever did come to our attention, we would inform you of those as soon as possible as well. And then any deficiencies and material weaknesses, if they came about, will be communicated at the end of the audit. So 10 is the audit timeline, as I just alluded to. So starting planning now with this planning meeting, discussion of the activity that's going on. And through February and March, we will work on the field work as is typical and with the goal of ending by March 31st. So there's no changes to that. And on page 11 is just a summary of the engagement deliverables. So our independent auditors report on the basic financial statements of corporation for the year ended December 31st, 2025. In addition to the report on internal control over financial reporting, which is part of the government auditing standards requirement, so that is also part of that package as well. A management letter would only be issued if there were any significant findings or recommendations. So it's just on here in case that comes up. We will have the final communications with you as well with the audit results. And then the tax filings. And then the next topic is just to briefly touch on the new accounting pronouncements that are coming out to keep everyone aware. So GASB 102 is effective for calendar year 2025. So that one is for the year end that is currently going to be audited upcoming in 26. This is primarily, though, a notes disclosure based requirement. So it's something to keep in mind that management will keep in mind as they put together the financial statements. If there is anything related to any particular concentrations or constraints that you might have that should potentially be disclosed. So it may or may not result in any disclosures. If there is a result, it is just adding disclosure. So it's not a very big standard to add. Just trying to get more in line with FASB's concentrations and credit risk disclosures that they have, and making sure the governments are sort of really assessing if they have any supplier type constraints or concentrations on who they use to get products that might increase, or the revenues coming in, if they have any concentrations with their particular revenue sources. Also for the government side, it's more same thing, like if you are under any particular requirements that are forced down upon you, that would be more the constraint side, and may have to disclose if not. So I don't anticipate too much here, but there could always be something. But say even just like property taxes for the city of Albany could always, if something was pushed down and then the city had to make do with that decision and they didn't have full impact of it. So for corporations that are dependent on governments as well, any type of push down from that, it should have a disclosure.
And there was, yeah, and there was nothing that was, not encouraged before. Obviously, if something was material to your financial statements, you should be disclosing them and your facts and circumstances related to your accounting policies. However, there was really no explicit guidance from GASB prior to this,
So-
where FASB does.
I just have a question, and it doesn't really relate to Capitalized Albany, but if you were a very federal grant dependent, is this something that you
Sure.
would now be disclosing?
Sure.
Okay.
Yep, yeah. Yeah, exactly.
That'd be the primary kind of message of that,
Right.
yeah, something like that.
But then from a concentration, you're like the criteria for what's concentrated, like impact, but what is significant enough? Is that just kind of relative?
It is still very judgment based.
Yeah.
They don't give any hard and fast
Yeah.
determinations on that, so you have to be assessed. And if you determine that, if management determines, say something wasn't, and it was just kind of written up and documented, and it wasn't disclosed, that still have a lot of judgment. And then GASB 103 is not till the next calendar year, so the one you're just getting into, that one does have more substantial impacts to the financial reporting model itself. So that is a big standard coming up, how much it will impact you specifically just depends on how much you already do some of these things, like you have a classified balance sheet, that's one of the changes, so that doesn't change for you, you already lay out your current assets versus versus long-term assets, that's one of the changes. The management discussion and analysis has gotten a big revamp. So on what they really want said in the management discussion and analysis. So you have the entire year to kind of work out management does on how they want to make sure they're addressing that standard and making sure that the financial statements are reported in compliance with this one, sort of the big one since the main standard that laid out how to present the financial statements. But another year.
Oh, it is the same, right?
And slide 13 is just a required communication. We have to make sure that we put these are just the common presumed significant progress for any organization, management override of controls and improper revenue recognition. So we do plan our audit accordingly to address these risks as is required for the standards. There are no other unique specific risks that we've identified out of these, just these ones are presumed to be a significant progress everywhere.
Yeah, that doesn't, right, again, not anything specific to here, it's just a default auditing standard risk of saying, hey, here's a risk. And that's why we plan our independent audit, based on those risks to make sure that we test for those very things, to make sure that they're accounted for properly. Because at the end of the day, management, you got your accounting, you got your process, you got your procedures, but then management can overstep and override those controls. But obviously part of our audit process and our testing and our sampling and our assessment of the financials, test for that. So again, very stable. With that said, I mean, that really concludes our formal, presentation. But if there's anything, from the committee's or management's behalf that want to make sure that we incorporate into the audit process,
I think that's great, Brian and Jessica, thank you very much. I don't think there's any action other than for me to sign, for us to sign the component of it.
Yeah, we would do a motion.
Oh, we do need a motion for that.
Authorize
Oh,
you to
okay.
do that,
Okay.
yes, sir, as the committee would authorize the engagement.
Okay, all right, and all in favor?
Hi,
Aye.
who cares?
Motion carries. So thank you. The case.
Yeah.
All right, well, I think that's, next up is the annual review of corporate policies. First is review of ethics policy, right, and Tom, Brian and Jessica, I don't know if you want to say it's fine, or,
sure, I mean,
okay, okay.
just in case.
Yes, sir. So there's no suggested changes to the ethics policy. This is based on both an ABO template and also the public officers law, which we're not applicable to, but a lot of the tenets of the public officers law are carried over into our code of ethics. And basically, the idea is that no director or employee should act or in any manner. You have a duty of confidentiality, duty of fiduciary duty, you have the duty of obedience to the corporate policies we just talked about. Those are the three basic duties in the nonprofit director role. And basically, we have both the code of ethics and a code of a conflict of interest policy to help directors guide them in a way that they don't act to either actually create a conflict or to appear to create a conflict. And those basic tenets are outlined in both our code of ethics, and then the next policy we'll look at is the conflict of interest. One note on the conflict of interest, and I know everyone knows this, but I say it every year. Every year, we annually go through an exercise where the board members each submit a declaration, which gives both the board members a moment to think and consider, like, how am I involved this year? Has it changed from last year? What's my job? What are my other roles in the community? Am I a director somewhere else that I didn't think about since I last filled this out? And that provides both you and then the staff an ability to sort of take a picture of where you are at that certain point and then think about, okay, do we have any transactions or contracts or relationships with any of the people that may have just been listed. So that both helps you and the staff police any potential conflicts. So again, no changes to either of these, to the committee members, none recommended, none mandated by law. And so they're here, as a template. Again, we do this every year at this meeting to go through and make sure that we both look and review these policies.
And then finally, whistleblower.
Yeah, and again, same, this is actually much more based on the ABO template. I think almost word for word, several years ago, we put this in effect when it was a recommended policy. And so basically, as you would imagine, all of you probably have this in your entities, maybe separately, but this is meant to protect employees or directors or anyone that brings forward some instance or some belief that they feel there's a policy being misapplied or not followed or misconduct, something like that. And it does lay out a procedure for that, including, if need be, to go to law enforcement. So that's laid out in this policy.
Okay. So I guess a motion to advance this to the board.
I'll move.
All in favor?
Aye.
Motion carried. So I think for tomorrow's meeting, should be all set. Is there any other business for the committee? Yeah, I think that's it. Well, thank you so much.
Work for that.
Yeah. Well, this meeting is always, this is the nice meeting. Actually, no, some large, yeah. With that, I will have a motion to bring the meeting to close.
I'll second.
All in favor?
Aye.
All right, close out the meeting. Thank you.
Thanks, everyone.
Thank you.